If you're a homeowner over 55 years old, today's video could be the game changer you've been waiting for. We're going to explore the hidden truths about equity release that could alter your financial future in ways you never thought were possible. Let's talk about the 4 truths of equity release. Despite popular belief, equity release plans don't require you to take a lump sum loan. Some lenders offer a drawdown facility where you take an initial sum and can access further amounts when you prefer. This means interest only applied on the amount taken and not the amount approved, potentially saving you money and helping you manage your wealth without affecting means-tested benefits. Imagine the peace of mind that can come from knowing that you've got a financial safety net that you can dip into whenever you need it. Truth number 2. Contrary to what you might think, many lenders will allow you to move home and take your equity release plan with you, provided the new property has the same or a higher value and meets the lender criteria. Yeah, there might be some exceptions like boat houses or properties above commercial premises, but generally the world is your oyster. Truth number 3. You can downsize without penalty. If you decide to move to a less valuable property and pay off the required percentage of the loan, you can do so without facing an early repayment charge. That's as long as you have a downsizing clause with the equity release agreement. It's like having the best of both worlds, the flexibility to move and the freedom from penalties. And truth number 4, despite what the naysayers might say, you still own your home. And with a lifetime mortgage, which is the type of equity release plan chosen by over 99% of borrowers, you retain 100% ownership of your home. Your home is and will always be your home. So let's talk about some of the myths about equity release. Myth number 1, you end up paying more than the value of your home. Not necessarily. If you choose an equity release plan from a lender that is a member of the Equity Release Council, you'll be protected by their negative equity guarantee. This means that even if your lifetime mortgage debt grows beyond your property's value, you'll only ever have to pay back 100% of the sale proceeds and not a penny more. Myth number 2, you have to pay the interest each month. Not true. With equity release plans, you're not required to make monthly repayments. However, you do have the option to make partial or full interest repayments. If you don't make any payments, the interest is rolled up and added to the loan, which increases over time. Myth number 3, equity release is a last resort. Many believe that equity release should only be considered if you're desperate for funds, but it's a misconception. In reality, equity release can be a smart financial tool when managed correctly, especially considering the low interest rate environment we're currently in. It can provide a tax-free cash boost for retirement and even help reduce inheritance tax. And myth number 4, your family will inherit your debt. Well, this is a common fear, but it's not a reality. As I mentioned earlier, if you choose a plan from a lender who's a member of the Equity Release Council, you'll benefit from a no negative equity guarantee. This ensures that your family will never be left with any additional debt to pay after your home is sold. So, let's move on to the rules of equity release. Always seek professional advice. Equity release is a significant financial decision, and it's crucial to get independent advice from a qualified financial advisor. They can help you understand all the ins and outs and evaluate your situation and recommend the most suitable plan for you. Understand the terms of your plan. This seems like a no-brainer, but it's crucial. You need to know about any potential early repayment charges. What happens if you want to move or downsize, and how the interest will be added to the loan. Consider the impacts on benefits and tax. Release and equity can affect your entitlement to means-tested benefits and may have tax implications. So, ensure that you have a clear understanding of these potential impacts. Discuss your plans with your family. Although it's your decision, equity release can impact your family's inheritance, and it's a good idea to involve them in the discussion and just keep them informed about your decisions. If you're interested in seeing if you could release equity, simply click the link below and fill out the short form. It contains a few questions like your property value and date of birth, and it'll give you access to quotes tailored to your circumstance. It's totally free to fill out, and of course it won't affect your credit score. Click the link below and fill out the short form to try it out.